Hey everybody, it's Chris Kirkpatrick and welcome back to the Life 180 channel. And for this video, I want to talk about the importance, or I don't know, the importance, just giving clarity around the infinite banking concept and I guess the importance on it for entrepreneurs. I talk about this a lot. I know a lot of entrepreneurs are, seeking out, just trying to educate themselves about this strategy. There's a lot of people out there who like to do whiteboards and give their opinions and all this stuff. I will say that pretty much everybody else you're going to find that's going to be talking about this is going to be a licensed life insurance agent. I do want to tell you with 100% transparency, I cannot sell you anything. And so the opinions I'm going to be giving you are going to be based on the fact that I do this for myself. I coach entrepreneurs, I help them build their businesses. And I'm also a huge believer that in that coaching, based on the experiences that I've seen and from mentors I've worked with for 2 decades at this point in time, that the success of your business is going to be drastically impacted by the financial system and strategy that you run your business inside of. And so I'm a huge believer. I guess I'll say it this way. I'm a huge believer that I don't believe any entrepreneur should take their money and put it anywhere where they don't have access to it, where they can't touch it. Because of the fact, like, I know a lot of traditional financial advice out there is telling you that you need to put money in a 401k, a solo 401k, an IRA, something of that nature, a SEP, and you need to defer taxes, and reduce your current tax liability. But remember, it's a tax deferral, not a tax deduction. And I've always been a believer taxes are going to go nowhere but up, but I'm really a believer of that now. But more importantly than like the basic tax conversation, and I don't want this to get into a long element of this because I want to get to the point. But more importantly than just the tax conversation is the fact that, listen, you're an entrepreneur. I'm a big believer that whether you're an entrepreneur or a real estate investor or a trader or you do something else creatively. I know people that utilize the IBC strategy for like hard money lending. I know that they do it for fixing and flipping homes. They do it for fixing and flipping cars at auction. They lots of different opportunities based on your skill set. I know a guy that actually goes in and he buys like collector shoes and sells them doing this. And so there's lots of ways to leverage this strategy based on your skill sets, based on your passions, based on your ability to create value in the world. For this video, let's talk about entrepreneurship and your ability to create value, right? And ultimately, your business is where you're going to get the best returns in your life. And being able to create a system, a financial system, both in your personal life and your business is going to have a significant impact on how you can grow your business. And the intention, Life 180, living intentionally for excellence, the intention in which you handle your money inside of that system with your business and your personal life is going to be significantly impactful. So what I wanted to do is I usually don't like to talk about the specific product, so to speak, simply because I don't feel like a product is going to solve your problems. In fact, I'm going to show you a couple products, but I'm also going to tell you that these products aren't going to solve your issue. If you get these products and you just let them sit there, they're definitely better than like putting your money in a bank account and letting it sit. But they're still not going to solve all your issues or you're not going to be optimized, right? With what you're trying to achieve. And so what I want to do is just kind of like look through a couple illustrations. I'm going to open up a couple illustrations here. And then what I'm going to do is I'm going to show you, what these are. And then I'm going to have a conversation around like kind of all the moving parts of these illustrations for, how it might impact your business and your circumstances, whatever it is for you. So let's take a look at this. Let's assume you're a 35-year-old. Obviously, there are variables. I do want to put this out there. I didn't build this illustration. I had a contact build it for me. I don't have access to illustration software. So I had one of my contacts build it, and it's actually really good. I got a couple options for how this looks, and I'm going to kind of explain what those options look like. But ultimately here you can see in the far left corner here, oh, that highlights everything, unfortunately. But you can see in this column here, year 1, you put 50,000 in, and then it goes to 20,000 thereafter. At year 21, it goes to 2,000. The reason it does that is because it's a 90-10 policy, meaning it's 10% base and 90% paid up additions, meaning it's going to be a very, very efficient policy. There is a term rider on this policy that is a 20-year term rider. And so there are some costs that go along with that. That those costs are there. There's some good elements of that and some bad elements to that. But at the end of the day, the insurance, the benefits, the liquidity, the access to your money for opportunity, the access to your money in case of crisis, it's all there, right? Um, if you look at this and you just look at the numbers, there's a couple components to this, and that some of the naysayers, let's say the Dave Ramsey people of the world, will kind of slam against, and it's they're going to be looking at the fact that, okay, you're putting 50,000 in year one, and you only have 46,000 available, right? And so for full transparency, you can't tap all 46,000 of that. You're probably going to be able to tap about 95% of that. So you always want to leave about 5% in there just for safety's sake. And it's also important to know that 46,000 is after the first year. So that's there after the dividend is paid out. That is a year after it's been there. So, but think about this from an entrepreneurial or a real estate investor perspective. I'm using 50,000. So there's an extra 30,000 dump in the first year, the $20,000 premium plus the $30,000 dump in. But I just wanted to show this to be 100% transparent about what these things look like, what they can do. But more importantly, than just showing you the layout of the policy, is talking about the philosophy of the policy. Because let's face it, this isn't going to get you rich on its own. It's just not. Your ability to create wealth isn't going to be based on a life insurance policy. It's just not. And if anybody tells you it is, then just run. Don't work with them. They don't understand it. They don't get it. A lot of people think it is. They just want to like have you get into this and then do the retirement income play. But ultimately, what this is it's leverage. I actually did a video, I want to say 6 months ago, maybe, about how to buy real estate using your whole life insurance policy. I think that was the title of it. I'll link it up above in the card here if you want to watch it. But it shows how when you use a policy like this, how it can be impacted if you use a policy like this to purchase cash flow real estate. And then you take the cash flow from the real estate to pay down the loan, collateralized loan from your policy. And then that loan, gets paid down. And now what do you have? You have the appreciation of your property. So that increases your net worth. You have the increasing cash flow from that property, because over a 20-year period of time, rent will go up. So it will increase cash flow. Real estate's a fantastic thing because there's tons of tax benefits to that you get with the depreciation of the home, which is phenomenal. And so like that's where you create wealth, though, not inside the policy. The policy is just a system, right? So I'm using real estate as an example there, but I'll use we can use your business as an example, leveraging this to get assets that help your business grow, being a bank for yourself. The beautiful thing I love about this concept is like life insurance companies, when they do this, you're not borrowing from your own money. You're borrowing against your own money. You're using the capital in your policy as collateralization to have guaranteed loans from the insurance company. I will also say that it doesn't always make sense to borrow from your policy or against your policy from the insurance company. Sometimes if you can get a loan rate that's cheaper, leveraging your policy as collateralization from an outside lending source, you could do that. Maybe the policy loan through the insurance company is 5% interest rate, and maybe you can get a collateralized loan if they know you have it to guarantee it, and you can show them the statement of your life insurance policy, and they'll give you a 2% interest rate. You just have to weigh, as an entrepreneur or an investor, maybe you're flipping a house and you're not certain the structure of the loan. The beautiful part, even though the interest rate may be a little higher, and you just have to weigh these risks for yourself. The beautiful part about the life insurance loan, even though it's a little more expensive potentially on the interest side, is that it's a completely unstructured loan, right? So that means if you can't pay it 1 month, or if you do a flip for a home, which we've done, and you want to flip a home and you think it's going to take you 3 months or 4 months, maybe 120 days to flip that home, and it winds up taking you 7 months. Well, if you have a structured loan through an outside source, that's going to have you require to make payments. So that may cause a little more havoc in your life. And granted, the money is in your account, so you can always pull from it. You just have to make that decision if it makes sense for you to manage all that, right? To navigate that. And what is that worth to you? And so there's always a cost associated with convenience, right? No matter what. And so that's something to consider. The other thing I would say is like, when you like, let's look at the alternative. A lot of people don't like this because, well, Dave Ramsey doesn't like this. I'll just say it that way. Because if you look at your 20 here, what have we put in? $430,000 into this policy is what I think at this point in time. $430,000, and you got $631,000. But it's really cool if you look at year 20. You put in 21 or 20,000. It grew by 44,000 that year, right? Like in the 3.1 million death benefit is pretty awesome if you think about it. Now, here's the other thing I want to talk about is, like, if you notice the cash value keeps going up as time goes on, is because as more cash goes into the policy, the death benefit goes up. And so then what happens though is the term rider on this is the negative part of this, is that the term rider at the end does drop off. And when it does, the death benefit at year 21 drops significantly, right? So this is a 90-10 policy, and it's something to think about. You'll notice that there's a lot of liquidity immediately. If you compare it to mutual funds, obviously it's not going to perform on the same level. But don't forget, when you put your money in mutual funds, you lose accessibility to that money. And so having accessibility to the money here, what you lose in returns in this policy, you can make up for returns outside of the policy simply by having access to this money for real estate, right? So you can't look at this as just an apples to apples thing. You have to look at the systematic returns of how you plan to use it, if that makes sense. That's the power of utilizing the system for your business or for your real estate ventures. So I'm going to switch from this policy, and I'm going to go to a 70-30. So this is a different animal. Same idea structure wise. We were able to design it a little bit differently as we kind of like we're looking at all the moving parts and all the benefits. And so there's a couple things to this. We wanted to optimize this one, even though it's a 70-30, meaning it's 30% base. So full transparency, the life insurance agent, the higher the base, the higher the commission. And so most people look at that as a completely negative thing. Sometimes it is. Obviously, if it goes too far in that direction, it's a horrible thing, right? So you have to be educated and make sure you're doing the right thing for you. When you look at this policy, though, you could see the other one is 46,000, almost 500 in liquidity year one. This is 43,000. So you do lose a little bit of the liquidity in year one. But what happens is that kind of starts to make up for it. You can look at year two. You put 20,000 in, the policy value went up by 19,100. So almost even. By year three, the amount of money that you're putting into this policy is literally the cash value is increasing by more than what you put into it. So that means a lot of people are like, oh, why would I do this? Because it takes till year 7 to get even, right? Well, year 3, the first 2 years are kind of like the investment in the long-term strategy. Year 3 and beyond, any new money you put in is operating on a positive basis. So year 3, 4, 5, 6, and beyond, it acts like a bank account on steroids, right? Now, what we did on this one is we put a 7-year term rider. So if you take a look at year 7 here, you can see, oh, it's all highlighted weird. Sorry. Oh my goodness. How about this? Well, you get the point. Yeah, I can't seem to get it to highlight properly. So you can see year 7 here in this blue line, and it's a $2.151 million death benefit. You got $173,000 in cash in this policy. And guess what? At this point in time, the term rider drops off at the end of year 7, and year 8, the death benefit drops to almost 1.1 million, and you got $200,000 of cash value. The policy's going up by about $5,000, almost $6,000 more than you put in it every year. Actually, over 6,000 because you're only putting 19,000. The premium drops at that point in time. So the great part about this is, like, in the other policy, what you can see here, I'm going to switch back, is that you have a lot of insurance, right? So the negative to that is, like, if you are an entrepreneur and you say, I want to stack another policy, and you're like, you're loving how much cash you have in this and you want to put more in, which happens all the time. There's only so much insurance you can get, and you may be limited. You may be completely restricted to be able to do more, to do another policy, because you already have too much insurance. By doing it this way, it makes it so you have less insurance, so you can actually stuff more cash in. So there's a little bit more of a cost on the front end to do it, but it's really negligible. Like when you're talking about $3,000 of less liquidity year 1, when you look at the fact that, you could ultimately have hundreds of thousands of dollars. So we're talking about a fraction of a percentage point in like year 1 cost, but it's not even a cost because it will slowly become liquid if you look at it that way. You just have to really look at what are your objectives with this and how do you want to use it, and look at all the moving parts to it. But either way, the principles of them are the same, whether you decide to do the 90-10 or the 70-30, or you come up with some other structure. One of the things that really frustrates me with people and with agents on the internet is they say, well, 90-10 is the only way to go, or 70-30 or 60-40. Those are the only ways to go. And people like to stand on their soapbox and beat their drum and all that stuff. And listen, like I said, I'm not licensed. I don't have skin in the game. I can't sell you this. I just want to give you the best advice possible. I love working with entrepreneurs. If you have questions about this for yourself and you just want to talk and you own a business, I love talking to business owners. I'm a big believer in networking and in communicating with people and seeing how I can serve people, because you never know where opportunity exists when you have conversations with people in need. And so, like, if you're an entrepreneur and you're interested in this, even though I can't sell this to you, I promise you, you're not even going to find an agent in the world that knows more about this stuff than I do. I mean, I did do this for a living for years as the head of development for a Fortune 1000 life insurance company. So, like, I understand this stuff. I have a passion for it. I just decided that I enjoyed building businesses more than I enjoyed selling life insurance. Even like, I believe this is a big part of everybody's should be a big part of everybody's strategy if you're an entrepreneur. Granted, it's not for everybody. But when it comes to all this, don't just get wrapped up in what you're finding on YouTube, with everybody saying this is the way, this is the way, this is the way. In fact, if anybody's telling you this is the way, I'm going to tell you, like, just don't work with them, because the first thing you want to be working with in somebody that you're talking to with that is really them asking and seeing if they can get clarity about what's important to you. What are your objectives? What are your challenges? Like, what problems do you have in your life and your business? How are you looking to solve that? Like, what is your exit strategy for your business? How can we maybe fund this in a way that benefits that? Like, there are a lot of different things to take into consideration. And so the reason I wanted to do this video is because I've been looking around, and I don't think I've actually ever done an IBC specific video. I mean, I do a lot of financial videos because I think it's so important. But I don't think I've ever really done a specific IBC video talking about this, right? And in these terms. And so that's all I would say to you. And so if you are looking out there, if you have any questions, if you have a policy that you think is jacked up, which probably is a lot of you that are watching this, and you're kind of like pulling hair out of your head, not sure what's going on. If you have something else going on with your business and you're trying to see if this works for you and you're just really uncertain, I'm happy to have a conversation with you. Maybe I can end up helping you with something else in your business or your life. I don't know. I have all sorts of different things. You can go to life180.com and check it out. But either way, regardless if I can help you with anything else or not, I'm super passionate about this. I think 2021 is a hugely pivotal year for people. It's going to be a year that you can either thrive or you're going to struggle. It's going to be one of the two. There's going to be the haves and have-nots. That growing gap and divide is going to get greater and greater. And so I really implore every single person, in this world, to really take a good hard look about what financial strategy you're using in your life, being intentional about figuring out where you want to go and reverse engineering a plan to get there. Don't just be reactive, and really chase it, get after it, move after it with speed, and move after it with intention, and move after it with urgency. Because if you don't, challenges, trouble may be on us sooner than later. I've done another video on the coming financial crisis in 2021. And if you haven't watched that video, make sure you go watch it, because it's absolutely imperative that we get ahead of this thing. And I believe this is a strategy that is going to protect your money, that it's going to give you opportunity. Listen, the time to really make money is when the world is going through challenges. More millionaires were made in the Great Recession in 2009 through 11 than any other time in the past 50 years before that. And so, a lot of people struggled, but when certain people struggle, it's because their financial structure is poor and they have to make bad financial decisions in times of hardship. And so what utilizing a strategy like this does, it just means you have to be intentional. You can't be thinking about the way the rest of the world is doing things and getting caught up in the media and getting caught up in all the hype of like all these different stocks. And dude, I mean, look at the GameStop thing. That just goes to show the stock market is completely manipulated. And it just goes to show, why would you put your money in something that you don't control, something that can be controlled and basically manipulated away from you? And that doesn't even take into consideration the government's ability to take away from you with taxes and all these other regulations. So that's why I'm so passionate about this for entrepreneurs, because I know entrepreneurs are people that are like, they're the people the world depends on to make the world a better place. And I know if you're watching this that you resonate with that, and that you're somebody who, whether you think about it or not, deep down, you're really striving and you're trying to do something better for yourself, for your family, for your community, and for your country. And I really honor that. And I just, that's why I love doing these things. So if you have any questions, feel free to reach out. Go to life180.com. There's a link down below as well. You can click on that. Happy to talk to you. So I hope this video serves you. If you found value in it, go ahead and click the subscribe button, click that bell. I'm putting out videos like this a lot. I've been trying to do more videos lately. I've kind of went through a family crisis, just coming out of it at this point in time. My father-in-law was diagnosed with stage 4 pancreatic cancer. And so it took me off my game for a little while, but we got to put our priorities where they are, and it's got to be with family, faith and family first over business. Right. And so that's what we're doing. And it's been challenging and also a blessing experience as well. A lot of eye-opening, and it's been, good and bad, bittersweet, so to speak. So anyway, I hope that helps. I look forward to staying connected. Have a blessed, inspirational day. I'll talk to you soon.